Distell is South Africa's leading producer and marketer of wine, spirits and flavoured alcoholic beverages with a market cap of 20 billion rand. It was formed from the merger of Distillers and SFW in 2001. It's in the process of growing its presence in North and Latin America, Europe and Asia. It has a price to earnings ratio of 20 and a dividend yield of 3%. What are your initial thoughts, Daniel, on Distell?
So I think that, okay, first of all, they do have an international presence, although they are still predominantly in South Africa. I think about 80% of revenue is still local, 75-80%. You have been hearing quite a bit of noise about their marketing, for example, Amarula overseas. I mean, it is doing very well, but once again, just to pull that back to the point that we're still very South African focused. One more thing I'd just like to say about the valuation is that the most recent HEPS numbers were understated. HEPS, the headline earnings per share, was understated because they took
You've been well media trained to break it down, headline earnings per share instead of HEPS. Well done.
I learned from the best. They've taken on a provision for certain duties that they might have to pay going back on certain beverages that qualify for different duties than they thought. So without that provision, earnings are actually up in the low 20s, like 23% or something like that, which was a very good result.
Paul, Distell, what can you add to the story? I know there's going to be a flurry of information in terms of what you're going to come up with.
It's always been interesting to me that they allowed that merger back in 2001. The Competition Commission must have been sleeping at the wheel that year because SFW, which is Stellenbosch Farmers Winery, we had already hoovered up most of the sort of, Stellenbosch-based wine and spirits industry, things like Klipdrift and so on. And then Distillers, the old Distillers, which came out of the Remgro stable, had got everything else, and they basically just put it together. Totally dominant in this market. We'll talk a little bit about KWV, which is there, and there have been a few import tap alternatives, but really they do dominate with the manufacture of the spirits industry. They buy, liquor and alcohol products and blend and do all the stuff for the whiskies and the Amarulas of the world and so on.
You know a lot for somebody who doesn't drink.
Quite frankly, from here now, it has been a growth market. So as much as we were talking about tops beforehand, well, these guys make all the stuff that they're selling at these places. So, it's a lot to like. It's very tightly held. That's the only other problem.
So you can't get your hands on any.
So SAB Miller owns like 35% of the shares, and then Remgro with the PSG guys through that thing called Cape Vin own all the rest. So what's left for the minorities is very small. But look at that, after being quite boring for a few years, it's popped its head up.
The big question, of course, as usual, is when a share gets to this price, is there more upside potential?
Well, okay, so that always depends on the underlying business and how it's operating, not really on the price, because price is only a reflection of what the market as a whole thinks is going to happen, but through your own analysis, you can come to different conclusions. The main thing to note about this stock is that they're mainly in spirits, wine, and ciders and ready to drink. So those three categories. Spirits is under a bit of pressure with the focus because brandy, the category for brandy locally is not going anywhere. Wines is in a bit of a difficult place considering that that a significant amount of
Why is
exports.
brandy not going anywhere on the local front?
Do you drink brandy?
No.
Well, that's probably why.
Well, thanks. I'm not going to prop up the whole liquor industry on my alcohol bill. All right, okay, we'll move on past that, and I won't be asking any more questions on my drinking habits. So continue with
so
your story.
the growth area is ciders and ready to drink. So in the most recent results, that showed phenomenal growth. They've got unbelievable brands there that are doing superbly well. They've got Hunters, Savannah, and I expect that to continue and drive a significant amount of the growth going forward. So I think at these price levels, I'm not saying the stock is cheap, once again, like SAB, I'm not saying it's cheap, but I'm saying that there is opportunity in future from the underlying business model of driving that cider and ready-to-drink market that could justify that you'd look back in 2 or 3 years and you'd look at this price and it would be justified.
Do you like the underlying business model then? Let's not talk about the share price.
This ready-to-drink thing is amazing because what they're saying is that people are too lazy to take the Coke out of the can and the brandy out the bottle and mix it together.
Mix their own
so
drinks.
Now you can sell somebody, already the Spoken Diesel product like in a can and off it goes. So the same is true within the sort of ladies market with things like Brutal Fruit and all that kind of stuff. Hey, that's what the kids are drinking. What am I going to do? What am I going to say other than that happy days? You can buy the stock. The only thing I keep coming back to is the liquidity is very limited. So you constantly feel as like you're pushing it if you're buying it in any kind of scale. But
so if you see any on the market, get your hands on it. Distell, hot or not, Daniel?
So I'd say similar, same story as SAB. It's not cheap, but it's a nice long-term portfolio holding to tuck away somewhere.
So,
It's a hot.
great, thank you. Paul, hot or not on Distell?
I'll go not hot. I prefer the beer end of the market, which is less value driven in terms of those syntaxes.
It's only because you drink beer.